Welcome back to the Dividend Diplomats YouTube channel. You know you got your boys, Bert, the Hurt, rocking that J Ram cap over there, representing the Cleveland Indians tribe, guardian, you name it.
Playoff bound Guardians, Lanny.
Oh, Central winners, baby. Keep finding ways to win games. I love it. You know you're rolling with Laney, the Dividend Diplomats, guys. And we're here to talk to you about 5 dividend stocks that may be just too low to ignore. We wanted to bring that to the table as you start your investment journey during the first week of October.
That's right, everybody. We are pumped up. These are 5 fantastic dividend growth stocks. And I think we actually own all 5 of them looking at this listing, right?
You got it, brother.
But you know, everybody, before we talk about these 5, before Lanny finishes that thought, there is one thing left that everybody has to do down there. Check out that subscribe button below. It takes 2 seconds. Click it. Keep watching. So close to 15K. Thanks, everyone. And, just give this video a thumbs up here. Easy, like you click, thumb pops up. Everything's good to go. You like it. Thanks, everybody. Lanny, how pumped up are you to talk about these 5 stocks today?
I mean, pretty pumped up. I mean, these are stocks that we each own, stocks that I know is probably on a lot of dividend investors' minds or beginner investors because they're looking at some big stocks that have really taken a beating. It's no surprise the S&P 500 was down again to finish off September, down another 2.5%. So over the last month, it's down about 10%. Year to date, S&P 500 is down about 25%, guys. So prices are significantly coming down across the board.
And this is an excellent time for you to start lowering your cost basis in positions that you own, or starting that new position in a dividend stock that you were waiting a little bit longer for the price to come down last year. Here's your chance. Some great opportunities. Just always keep looking at the metrics. Keep looking at it to see if it fits your portfolio. And when it does, you strike, because these are some great times to potentially build those positions. And how do we suggest that you do your research to find undervalued dividend growth stocks using our famous patent pending, trademark pending, whatever it is? We'll get it eventually. Maybe 2025, we'll get that application through, using the Dividend Diplomats dividend stock screener. 3 metrics: PE ratio less than the S&P 500, payout ratio less than 60%. Although that perfect one is between 40 to 60%. 3, history of increasing those dividends. Lastly, that bonus metric, after we look at the first 3, that dividend yield, brother.
Here it is, guys. Again, we're talking about 5 stocks. We're going to dig right into them. I mean, this is not, obviously, for a quick disclaimer, not investment advice. Definitely do your own research, make your own stock investment decisions. But, these are definitely stocks that I know I've been buying over the last few weeks, or stocks that I will buy in the upcoming weeks. But let's just get right into it. I know the first stock, people are going to get so mad. I can't wait to see the comments here.
Oh, I'm smiling. I can't wait for this.
Guys, let's look at the first stock here on this list, AT&T. Ticker symbol is T. Yeah, we're talking about AT&T stock being a possible stock that's just way too low to ignore right now at $15.34.
It's insane what's going on in the telecom sector. I mean, all the AT&T noise is gone now. They've spun off Warner Brothers Discovery. That's WBD in your portfolio now. And since then, there's this newly crowned AT&T, and the price just continues to fall. Year to date, AT&T is down 20%. 52 weeks, they're down 25%. These are interesting levels to look at AT&T now and start considering, especially when we start looking at the metrics.
You guys remember when AT&T was yielding 7 to 8%? Well, guess what? They're right back there. So, guys,
they're coming home.
Yeah, AT&T. The price to earnings right now is currently 6 times earnings. The dividend payout ratio is still pretty safe at 44%. Remember, they reduced it after they spun off Warner Media Discovery. Now, even with that, though, their dividend is still safe as earnings expectations have declined. Dividend yield is at 7.24%. There's no growth yet. So again, you're looking at a safe dividend payer right now at 7.24% yield.
Look, and for everyone that says, well, how can it be safe they cut their dividend? This is exactly why they cut their dividend. They wanted to lower it down to levels that are in a much more manageable payout ratio with their current debt load. So 44% payout ratio gives them plenty of room to just keep the dividend where it is or eventually start growing it slowly as they used to. That's why we look at the payout ratio.
Yeah, and at $15, I mean, that's kind of a wild stock price right now.
It is. It's easy for you to pick up 10 shares, lower that cost basis, and just get a nice yield on it. And especially if you already had an AT&T and you're staring a loss in the face, it's not a bad potential move. Lower that cost basis. So AT&T, guys, again, we'll summarize them all at the end. We'll put the chart up so you can see them there. But AT&T, that 6 PE ratio is looking great. Moving into stock number 2, though. Stock number 2. Yeah, your look says it all. This one's a dog. It's been a rough year for Scott's Miracle-Gro, ticker symbol SMG. Tough year indeed. Year to date, they're down 74%. 52 weeks, they're down 70%. Guys, they were trading over $200 per share at one point. I know it's been a tough year. The marijuana bet has not gone that well for Scott's, but the stock price has fallen to $42.75 at the moment.
I mean, right now, there's a lot of weird things going on internally at the company. You know, the CFO, there's some weird stuff going on there. And then I think the company's doing a reorg initiative right now. You know, obviously a very piss poor year for Scott's Miracle-Gro. We're investors. I'm not selling. You know, you look at our stock purchases video later on this week. You know, I've been buying maybe one share here and there as they keep coming down 5% every other day.
I think that's the strategy you look at for these stocks that we're talking here, just nibbling, just picking away at them potentially. Let's look at Scott's metrics, though, to see why Lanny has potentially been nibbling on them. Their PE ratio is now down to 9.72, so just under 10, a single-digit PE ratio. Their payout ratio is 60%, so right at our threshold that we're looking at. Dividend growth, 5-year average dividend growth rate, 5.09%. They've increased that dividend for 12 years, and they're currently yielding 6.18%. And Laney, if I'm correct, they didn't increase their dividend yet this year, right? They passed their normal time in July/August.
They have one more shot.
So you're saying there's a chance?
There's a chance, guys. There is a chance. Now, again, yielding, over 6%. All, you know, the highs of 200 now down to $42 and change. You know, again, a stock that you can't really close your eyes. You have to look at it because, you know, this is like Goliath becoming David here.
Yep. No, I love it. So again, it's interesting. Tune into our purchase video. Lanny's been nibbling. It's finally the levels where I might nibble and grab a share or two of Scott's, because I've been looking elsewhere. I haven't done it, but for $42 a share, it might be worth looking at once again for Scott's. So now, Lanny, I'm going to duck here for a second because this stock also, the third stock brings out the emotions of investors. I'm going to duck. You tell us what this company is. Getting off.
Guys, we're looking at Intel, ticker symbol INTC. This stock is down almost 52% in 2022, down to $25.77. So $25 and change. And you know, the price to earnings on this, with expectations coming down, is still at 11 times earnings. And the dividend payout ratio, because the expectations are now lower, is still safe at around 65%.
I don't think the market likes Ohio, Lanny, because ever since they've announced that new chip plant in Ohio and that went through, stock price hasn't gone through. But no, it's interesting. I have nothing more to say than it's interesting. These metrics are still fascinating here. I mean, when you also then look at the dividend growth, 6% 5-year dividend growth rate, increased it for 7 years. Not bad from the dividend growth perspective. They were on their way to becoming that dividend growth stock, that solid legacy tech company increasing their dividend. Even more eye-opening, though, Lanny, is why don't you tell us their yield at the moment?
I mean, again, it's very rare, if ever, to see Intel yield this high. They're at 5.67% on the dividend yield front, which you should get paid more because you know in the future dividend growth is going to be lower as they try to turn around this company.
Yeah, it's fascinating. I've been with you on this one. I've been nibbling shares here or there over the last few weeks, seeing Intel in the 20s, lowering that cost basis, building the position. I mean, I'm not making a big splash here, but I looked Intel before. I still like their long-term prospects. I like the sector, but that's just my personal opinion. Again, remember, everybody's your investment, your advice. It's just a sector in the long run that I like. So Intel's one of those companies that's just down right now.
The first time I bought Intel, which is about 11 to 12 years ago, I think I bought them in the teens, and they're close to being back there.
I think that's a great way to end it with Intel and a great segue into stock number 4, Verizon, ticker symbol VZ, the arch nemesis of AT&T right here. It hasn't been a banner year for Verizon either. Their T-Mobile seems to be taking a chunk out of the sector. They are escalating to become that third major player. So T and Verizon are suffering, especially as they lose subscribers. Let's look at the metrics here, because we've talked about Verizon for several weeks now on our website. So we've given some in-depth analysis about why we like Verizon at these prices. Let's just jump into the metrics here. PE 7, payout ratio 50%, 5-year dividend growth rate 2%, years increasing 17, and a yield of almost 7% at 6.87%. These metrics look very similar to AT&T, which we discussed earlier.
Yeah, except Verizon has never gone hog wild doing
That's
some
fair.
wild stuff.
Okay, yeah. Outside of the dividend growth and the dividend cut, the PE payout and the yield are all similar now.
Yeah. One thing to mention, Verizon's 159 billion in market cap. They're actually going to be one of the largest ones here on this channel right now that we're talking about. At 159 billion, that's bigger than Intel at 100 billion. Scott's is down to 2.5 billion, and then AT&T is about 110 billion in market cap.
Jeez, I forgot Scott's is down to 2.4 billion. That might be a screaming acquisition by some company that's just looking to pick it up. Anyway, neither here nor there. That's just speculation. But yeah, Verizon, not much more to say. Same reason I like T. I like Verizon at these prices. A great one to potentially nibble on. You mentioned the market cap, Lanny. We're saving the biggest and the best for last. Lanny, take it away. Finish this one off. Who's the last stock?
Guys, it's Bert's theme song back in high school. It's the thong, thong, thong. Bert's like, ooh, that dividend's so scandalous. Looking at my portfolios. We're talking Cisco, ticker symbol CSCO. And this stock is now down 37% year to date. It finally is coming way back down to like pandemic levels.
Yeah.
So guys, trading at a nice even $40 per share. And I do love Cisco at $40 per share.
I do too. Their PE ratio right now is 11.33, payout 43%, 5-year dividend growth rate 6.47. They've increased that dividend for 10 years, and their yield is now 3.8%. They're almost at 4% once again. It's a great call out, Lanny. It's a great one to throw in there.
Pretty safe, safe payout ratio at the 45%. So you have to like that. You got that good combination factor with yield and dividend growth. Mm-hmm. Again, 164 billion by market cap, slightly bigger than Verizon. But again, at $40, it's hard to ignore Cisco as a dividend stock to buy right now, just because, it's been a long time coming since Cisco has been at these prices. And when I mean long time, I'm looking at their chart right now. Yeah, it's been since, 2020. So a couple of years that, again, pandemic levels since it's been here.
It's been such a long time. That's a Boston reference. I don't know if that's up your alley, Lanny, of song references, but
do I know it? Yes. Do I sing it? No.
Yeah. All right. Deal. So everybody, the 5 stocks: T, Scott's Miracle-Gro, Intel, Verizon, Cisco. Interestingly, let's just say you want to throw one share each. You're going to come out next week. I'm going to buy one of each one of these. Total cost right now, $161.83. You would add $9.34 of dividend income, and your average yield for one share each is 5.77%. So let us know, everyone down here in that comment section, what do you think of these 5 stocks? Did they catch your attention the way they've caught Lanny's attention and my attention? If not, what other stocks are you watching as that market continues to tumble on down?
Now, guys, first off, we appreciate the support. Bert, are you buying any of these stocks looking at these prices?
Yeah, jumping through it right now, I'd say Intel, yes, I've been buying. Cisco's the interesting one that might be sneaking up further onto that list at the moment. Verizon, AT&T. I mean, T at this price, why not? It's just $15 is a funny price. But what about you?
I'll probably try to grab a share of Cisco at 40. Intel, I might grab a share of Intel, might grab a share of AT&T, might grab a share of Verizon. I might do this five bagger here.
Yeah,
Scott,
$161.
I might hold off on Scott's maybe until they drop another 5% or so.
That might happen on Monday at the rate they're dropping. That just seems to be their theme of 2022.
The beauty of a limit order, guys, is you can set that price trigger point and watch it happen.
Yep. So everyone, thanks again for your support. Let us know what your thoughts are. Are you doing the five dog bagger this week and grabbing one share of yeah. And let us know again. Subscribe if you haven't. Leave comments, like the video. You know the drill of what you need to do for our YouTube channel, everyone.
Guys, that was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.